All right, thank you so much for joining us. Welcome to another edition of Let's Talk AZ Real Estate with Sean Collins with my guest today, Mr. Andy from Axia Home Loan, or known as the Pink Loan Guy. As you can see, he's even got a name tag. So once again, this is the Finance Edition number 1. So let's get into this.
I'm Andy from Axia Home Loans. Been in the business now going on 3 years or so, and been able to educate the public as much as possible on the home buying process.
What is the first step to actually getting a loan?
Your name, your address, your date of birth, your social, and then putting it in the system and getting a real credit report. So getting your FICO score is the first thing in the home buying process, is seeing what your score is. Because without a qualifying score, it doesn't matter if you make $1 million a year, you're probably not going to qualify.
How much is that to actually get the FICO score?
It's very expensive. $0.
Oh wow, $0. It's free.
It's free. And it's simple as I can send you my link to my website. You click apply now.
What are the different types of loan programs available for new home buyers, or any home buyer? What are the programs out there?
If you want to buy a home and you have a decent credit score, then there's a program out there for you. Between just a straight up conventional loan, VA loans, FHA loans, USDA, down payment assistance programs, bank statement programs out there that's for self-employed people that don't want to claim everything on their taxes. We can just use your bank statements and give you a loan just off your bank statements. So there's programs out there, and at Axia we have 99% of any program out there is available to us at Axia. If you want a home, call me. Call Sean. We'll find a program for you.
What are the do's and don'ts for getting a home loan?
Don't buy a new car if you're thinking about buying a home in the next year or so, because the other part of the home buying process is first your FICO, and then we figure out what your debt to income ratio is. So if you're making $10,000 a month and you have credit cards and you have student loans, and now you go buy a car and now your car payment's $700 a month, well, all that $700 lowers how much you're going to qualify for. Don't open up new credit cards. You know, those are the types of things that people do all the time. Is I run somebody's credit. I'm like, did you just buy a car? Oh yeah, I bought it 2 months ago. Well, now you're not going to be able to qualify for your $250,000 house. Now you qualify for a $150,000 house, which we know doesn't really get you a lot.
Got it.
As far as the dues, pay your bills on time. Pay your rent on time, pay your car payment on time if you have a car payment, pay at least your minimums on your credit cards. At the very minimum, scrape up enough money to pay your minimum so you don't have any late on your credit report. Because revolving credit with credit cards like that just kill you on your FICO score. You can watch it drop every month if you're late with one payment, and they'll stay on your credit score for 2 years. I mean, obviously if you have a home right now, being late on a mortgage payment is going to be the worst.
Absolutely.
That hurts your FICO the worst. Then is car payments, and then credit cards, but they're all very important. The other thing that don't do is don't pay any collections. I know that kind of sounds very weird or not right, but if you're looking to buy a home, don't pay your collections until after we look at your credit report.
Okay.
Paying your collections most of the time hurts your credit score. It's the truth. Let me tell you which collections to pay. Keep your credit amounts about 10% of your max. So if you have a credit card that has $1,000 max, try not to let it go over $100.
Got it.
You know, leave it right under. I mean, that's going to be your best results to increase your FICO score. I mean, if you want to pay it all off, but pay it before the pay period ends.
Okay.
Because once the pay period ends, that amount is already reported to the credit agencies. Don't close credit cards. I mean, if you have 20 credit cards, you want to close a couple. But if you only have 2 or 3, keep them open. Go buy gas with it, go buy milk with it, and then pay it off.
Got it.
You know, let it cycle through and then pay it off, and let it cycle through and pay it off. Yeah, I mean, the whole thing about getting a home loan is showing consistency on your credit and being able to show that you're actually viable to pay a loan. You know, that's what it comes down to.
What is the most common mistake a homeowner makes when getting a home loan?
once you're under contract, I've seen it happen, is people will go buy new furniture and they open up new credit. We actually check everyone's credit somewhere between 5 to 7 days before closing, again, to make sure there aren't new credits being opened up, new debts being created. I've been at the closing table signing documents, and somebody will walk in, and we almost had one denied where they had to come up with more money to pay off their furniture because they went to, I think, Living Spaces or something and bought a couch for $900 and opened up a credit card. They had to pay it off before we would fund the loan because that was an extra debt and they wouldn't have qualified with that debt to income ratio.
Wow.
So that's a big mistake people make, and paying off collections. They think paying off collections will help their score, and they'll call me a week after they paid off their collection, said, I'm ready to buy a home now. Can I get qualified? And my score should be over 700, and their score dropped 60 points by paying off a collection.
What is the current interest rates now?
Interest rates, to me, are still very affordable. I mean, they range anywhere from 3.5% to 8.5%, depending on what program you are, how much you're willing to pay, how much you want back. One thing at Axia is I will show you the chart, and if you need money for closing, we can give you money for closing. You might just pay a higher rate.
Got it.
But people might be able to afford an extra $60 or $70 a month, but they don't have $4,000 or $5,000 for closing costs. So we'll pay closing costs, and you might just pay 0.5% higher or 1% higher than what the going rate is.
Your experience, what is the biggest fear that a homeowners seem to face when getting a loan?
So I know all our parents and grandparents always thought and were raised that they needed 20% to get a home loan. I just closed on a loan this week with a family, and I think it was a $170,000 house, and they came to the table with less than $1,000 to get in that home through down payment assistance and seller concessions and all that. So they didn't really need any money. I mean, my thought is if you can't come up with $1,000, you probably aren't ready to buy a home, because if you're going to rent a new place, you need first month, last month, deposit, and all that. It's costing you more than that anyways. So we can get you in a home for less than that. The VA is 100% financing. I'm doing a loan right now, closing next week. They're getting their interest money back at closing. They had to pay for their inspection, and that's it.
Wow.
So that's the biggest fear of people. Oh my God, I gotta save up all this money. Saving up money is good. Having some reserves in there will help you qualify for more, that we can show reserves, but you don't need 20%. I mean, you don't need 20%.
Got it.
20% is good to have, but you don't need it.
How does someone do a refinance on their home?
I mean, the process is very similar to purchasing a home. The big difference is you don't need an inspection, obviously. Yeah, so I mean, you fill out the application the same way. We run a credit report, debt to income ratio, and the big thing on a refinance is your appraisal. So to make sure that your appraisal is where it needs to be, enough to cover your current loan, because sometimes you just want a refinance to get a better rate. Sometimes you want cash to pay off credit cards. Sometimes you want cash to go buy another home as a second home. I'm doing one right now. She's refining her home in California, and she's gonna pull out $100,000 in equity in her home to buy 2 properties here in Arizona. And she has down payment. It's gonna be $50,000 and $50,000, 2 down payments on 2 different properties. So, I mean, it's a pretty simple process. I mean, the timing of it, you can get it done in 3 weeks probably. You can pull money out, or you can just save money. So if you have an FHA loan right now, and we'll dig in deep on another video. But if you want to get out of that mortgage insurance, refinance into a conventional loan, saves you money every month. So if you got equity in your home, it's not a bad time to refinance. Get that money out, because once the market goes back down, which we all know it's cyclical, it'll go back down, that money's gone. That equity's gone out of there.
Any more questions, please leave those in the comments below. Awesome. Well, thanks so much for joining us today. Once again, this is Sean Collins with another edition of Let's Talk AZ Real Estate Finance Edition #1. Once again, Andy from Axia Home Loans, the Pink Loan Guy, and Sean Collins with Let's Talk AZ Real Estate. You guys have a wonderful day, and we'll talk to you guys soon. Thank you.